Уважаемые дамы и господа, просим вас занять места в зале. Сессия начнется через 10 минут. Ladies and gentlemen, please take your seats. The session will start in 10 minutes. и господа, просим вас занять места в зале. Сессия начнется через 5 минут. Ladies and gentlemen, please take your seats. The session will start in 5 minutes.
Уважаемые дамы и господа, приветствуем вас на дискуссионной сессии про лизинг специализированного подвижного состава. Спрос встречает предложение.
Добрый день, уважаемые коллеги.
Good
morning, dear colleagues. Let me introduce myself. My name is Pavel Ivankin. I'm the chairman of the Expert Council Railway Transport Research Institute. Today's session will be dedicated to the specialized rolling stock lease. We will be, my co-moderator will be Evgeny Tatarinov, commercial director and the head of customer relations department, B2B leasing, along with Ivan Blagodatskikh, deputy general director of TransFin-M, and Ivan Blagodatskikh, the vice director general of PJAC TransFin-M. When we talk about the rolling stock, we usually have the association with standardized rolling stock, but here we're talking about specialized rolling stock, including fitting trains, fitting platforms, and coal transportation and mineral transportation carriages. And when we talk about open or short-sided carriages, the demand is not too high. We remember, the leasing companies remember the history of 2012 and 2013, where the demand was very low, and the operators still remember that low profit period. But in spite of the fact that open cars are a high trend in the market, the segment of specialized rolling stock since 2014, where a lot of carriages were decommissioned since they were outdated, and the trend is towards the fitting platforms, where the deficit is obvious because container transportation volumes is growing. And here we have interest for leasing companies. It concerns specialized cisterns leasing and container fleet. The majority of the outdated or decommissioned carriages was in large number. We see perfectly well what's happening in grain transportation carriages. We know the number of contracts in that respect, and the manufacturers of carriages, what they offer is not exactly what the customers would like to see. It concerns the mineral transportation carriages. In particular, we see that the carriages are larger size and large capacity, but the infrastructure is not ready for that kind of a weight and load. And in that regard, we'd like to hear from our panelists. First, what's your assessment of the specialized rolling stock lease market? Who are the players who are financing that market? Secondly, if you can able to answer that question, what are the elements of the tariffs that you're focusing on within the specialized rolling stocks lease? And what are the limits in this market in the nearest future? I'm giving the floor to Evgeny Tatarinov. Good morning, dear colleagues. We'd like to begin with basic things, what the operator's business is about, what the objective of that business is, in order to develop the topic, beginning with the classical rolling stock, and then slowly move towards the specialized rolling stock. Talking about any business, not only the operator's business, but the key objective of any business is profit. Profit is the difference between the income and the expenditures of a company, and then it depends on many factors like market particularities and management of the company's resources. If we talk about the profit element or segment of the business, it's the operator's assets and external management, marketing, and other aspects. If we talk about the expenditure part, there is the elements are the efficiency of management of the fleet and the costs, including spare parts and maintenance, That is what is part of the financing of the fleet. Then payments and cash circulation. There are elements of working with the tax load, and there's a classical instrument in leasing which allows uh, to say that there are no leasing operators in the market who are uh, um, doing their business in leasing or in maintaining just with their own funds. Many instruments are available for loans and crediting, and financing is one of the elements of purchasing. For purchasing the rolling stock, there are two key elements that are struggling among themselves: the organization of co-financing and the reducing of payment loads. And we see that there is opportunity to satisfy both of these needs. When we talk about the rolling stock expenses, there is a balanced story, the balanced situation where the operators have income and their expenditures which are almost equal. And in particular cases, up to 60% is the co-financing of expenditures. So where do these figures come from? It's the cost of the rolling stock and the terms of the financing and the cost or value of money. I'd like to focus a little bit more on this and then apply it to the rolling stock. We see that while evaluating the balance between the expenditures and incomes, many operators focus on the time frame of payments, and it's very sporadic. It's not regular because there are expenditures on the fleet. I'm talking more about repair works because it's one of the it's a major part of the budget, especially with the including the spare parts costs and prices. And at that, there are different models of doing business. Some operators prefer brand new rolling stock, because the cost of repair will be the minimal, but the fleet itself will be more expensive. Some operators purchase a rolling stock with some life cycle spent. Some operators buy a very old rolling stock, and we try to do a comparative analysis with the resulting figures on expenses, because the objective of an operator is not only to own the fleet but to make money while doing operational, while taking care of operational activities. While we in case of old or almost outdated rolling stock, operators may have efficiency higher than the brand new rolling stock. If you move towards the specialized rolling stock, in all types of specialized rolling stock, we see the same picture because all of the fleet is characterized by its high cost. If we take any cisterns for acids or oils or any types of fleet, the cost of that fleet for a brand new cars, it's higher in its price because it's more specialized than the regular rolling stock. Maintenance is higher, and thus the situation, in our view, is changing. That the purchasing of rolling stock, specialized rolling stock, having profit is very difficult. So I'm in part answering your question. So do we have sufficient rolling stock, a sufficient part in the tariffs in order to cover the maintenance costs? No, it's not sufficient. If we talk about market operators, it's next to impossible to purchase non-specialized rolling stock, either brand new or used, without synergy with the cargo owner. So the financing of specialized rolling stock is a result of a consortium. I call it it's a cooperation basically between the operator, the cargo owner, and the financing entity. Furthermore, we'd like to say that there are forms of cooperation that we envision. In financing, we rely upon two key elements, which are the property risks and credit or loan risks. In the case of specialized rolling stock, the majority of loan credit organizations they accept property risks with a lot of difficulties because the maintenance, the depression costs is historically high, and LTV, the level of LTV, the level of the ratio between the financing and the cost of property is quite low, and with that, any operator is not ready to distract or take from out of their assets to purchase carriages. And the second element is credit or loan risk. Out of the operators, not many are ready to maintenance the current loans, service and maintenance the fleet. And in this case, we're talking about the tools of reducing this credit risk, which will allow to improve the interest rates on and the terms of financing in order to enter those deals and close those deals with more comfort. And there are tools of reducing the interest rates of financing and tools to increase the loan amounts. And they are in the same plane, basically, of providing for the payments. So these tools include guarantees, classical instruments like guarantees. There is a corporate guarantees as well. We're also ready to consider deals by saying we talk about not only leasing but about leasing in general. So the rent expenses, if we talk about the rent model of business, this rent may be either with big fines for dropping the loan or for about stopping the rent contract with a better with the refinancing of the debt for the leasing part, not to break the contract. When we talk about the cooperation between the cargo owner and the operator, very few cargo owners would share responsibility in the business, because the cargo owners would not like to be the participants in the debt of the operator. In the many manufacturers and processing companies and extracting companies, but in this case, we may consider refinancing guarantees and such schemes as optional deals, which become part of the loan in the probability of the insurance cases. So as on behalf of a financing community, we're protected in the case of operator's default situation. On the other hand, we are creating some comfort for the cargo owners without increasing their debt. And parallelly, we have experience in creating of joint ventures of cargo owners and operators, because some companies have motive to maintenance their rolling stock, and thus we are accepting those risks more comfortably, easily. And it seems to us that currently there's a situation in which the financing of a specialized rolling stock is an objective not only for the operator but also for the cargo owner. And in finding a more diversified approach, which will lead to reducing the cost of financing and to increasing the amounts of loans of financing. And there are risks that are, and the prospects are positive for the company. There is experience for the universal and specialized rolling stock. And these are the key elements that I'd like to focus on. If Pavel, I hope to have answered your questions.
Компания Brunswick, да, у которой был
We have a company, Brunsell, and they have a very strict agreements and contracts with the owners, but it's very convenient for the leasing company. So according to your presentation and your slides, you're considering that for the specialized rolling stock, it is the most comfortable contract to get into this business. Is it so or not? What we're trying to say is that the agreement should not be just a rent, a strict agreement. There is an alternative scheme of provisions. So the contract has to be comfortable and convenient. But we understand that the final user should be the owner of the cargo. So if the cargo owner is behaving comfortably with operator, and if he is ready to do the payment according to the timetable, then everybody is happy, and we continue to live in this kind of partnership. But if it is not so because of the cargo owner, so then we have a different recourse. So for the owner. So then we need to give this park into the rent or leasing or purchase this specialized rolling stock. So this should be a mechanism which enables us during the whole contract to live successfully with the initial parameters. So talking about the specialized rolling stock, now we're talking that in most cases, in most contracts, the operator is dependent, so we don't have that many independent operators which are having this specialized rolling stock, as this TDK, for example, brand with this concrete transportation. So the cargo owner, he has already responsibility, isn't it so? That is correct for today. So most of the cargo owners, they have the task to, very unpleasant word, to get rid of not profitable assets such as rolling stock. Therefore, the cargo owners, they are trying to discuss different ways of cooperation with the market operators, trying to avoid these unprofitable assets. So it's not a secret. There is a companies SBTrans and Sibur. They made a joint company of the car. So Sibur gave the rolling stock to this company, and SGTrans, they are the operators, the managers. So that will be the model how the market will be developed in the future, because the owning of the rolling stock for the cargo owner is a not profile asset, is not a profitable asset. So because they concentrated on the production line, so they cannot manage efficiently the rolling stock. And the operator can manage the rolling stock efficiently. So that's why we need this kind of tool, so that the market operators and cargo owners can find a solution which is comfortable for both to decrease the load and the risks from the cargo owners. So Ivan, a question to you. In principle, the questions are the same. How do you see the sufficient or not rolling stock is today in the market? What is the perspective of the leasing of the rolling stock in the future and the current market situation? So the market of the specialized rolling stock today, we're working only in mass segment. Our company, we do not work with this kind of a rolling stock which Evgeny was talking about. We're trying to avoid it because our strategy is based on the existence of our own operator. So we are considering the risk only for those assets which can be managed by our operator in case of scenario if we're getting a default of the leasing of the recipient. So therefore we're trying to consider only the covered carriages, not open carriages, transportation of grain and transportation and using platforms. So we can also call it a specialized rolling stock, but it is a mass specialized rolling stock, common rolling stock. So our clients, they are coming to us with the cement carriers, with other carriers, specialized rolling stock. We don't want to take those risks. We're looking on the financial stability of the owner of the stock of the property. So the operator is coming with this leasing or contract agreement with the owner of the cargo. So by this we're trying to reduce the risk with this specialized rolling stock. So basically that is how we're dealing with the situation. So then I'd like that if there is a plan to sell the trans-container company, if I'm correct, that there are the tasks that they will trying to move the park to the sub-operator to get rid of it. So even today in the market of these fitting platforms, your company, how can you see the market in the year 2020-21 when we're talking about the fitting platforms? Will the market be wider? Will it increase? Will be additional niches? Okay, talking about the fitting platforms, we can see the increase due to the amount of transit volumes. So transit volumes is increasing, therefore there is a bigger request by 1.5 times. So, of course, as the requirement grows, we are expecting that it will be up to 82,000 platforms increase in the rolling stock. So to get to this rolling stock, 82,000, which is required, we need to construct annually not less than 7,500 platforms. So, and that is going on now. That's how the situation is at the moment. So in the next 5 years time span, we can see that we can be quite stable. We see that there is an opportunity to finance platforms. The price for platforms are maximum. It's an historical high price. The 3.8 million per, and the leasing payment is roughly 2,000 rubles. So the operator can carry this load, financial stress. So the platform is getting paid back in 7-8 years time span, fully financially covered. So one more time, if this covered carriage car is a universal one, but in logistics it's the most complicated one because they have a lot of empty runs. So therefore the requirement, when we compare them with containers, the requirement for these cars is less. So what will be a strategy into this covered carriage? So the carriage park is 42,000 pieces. So we are expecting that with the growth of container transportation, the covered carriage will be reduced by 30%. 30% of loads will be distributed by containers and semi-open carriages. But 70% of cargo will be still distributed by covered carriages. Here we're talking about sugar, cement, concrete, construction material. You cannot transport them by containers or by semi-open wagon, semi-open car. So therefore, getting used and disposed by the companies of the fully covered carriage by the year 2025, they will get disposed of 25% of their rolling stock of the covered carriages. So with the existing production volume of 2,000 covered carriages per year, we can see that in the nearest 3-4 years there will be no profit in this park. So yes, I agree that this segment is a mass segment. The operators and consolidation of the operators carriers is not existing. There are only two big ones, FGK and PGK, but there are a lot of small operators and they're working successfully and they have even better rate than FGK and PGK companies. So they're using their own features, their own directions and segments. They're able to work with the loading and unloading efficiently. They can deal with idle time. So they are getting good profits, and so we can say that even small operators are feeling very good and comfortable due to the efficiency. So then, one question to representatives of leasing companies with the existing trend over the rate reduction and a reduction of the volume, transportation volume. If you have a scenario for the year 2021-25, it can be similar to the year 2014, 2015. How high are the risks? How do you evaluate them? What is for you the red, so-called red rate, after which you will start to panic or you will need to do some special measures. So how you can see this boundary or this line? So talking with operators, we do not see that there is a dramatic fall as in the year 2014, because first of all, there is not such a proficit of the park, and even though it sounds strange, but it is supported because the speed of transportation is decreasing, and the program of construction of the eastern polygon is delayed. So therefore, the situation is not very clear. The flow is restricted, so proficit of the rolling stock is not existing. So since the year 2014 until now, there are quite a lot of owners, cargo owners, who invested in rolling stock. So basically it will be transporting money from one pocket into another. So answering your questions, do we see that there will be a situation like in the year 2014? No, we don't see that. But of course, there is some decline. When we will start to worry, when the price will be 4,000 rubles. So most of the leasing companies during the last crisis, they have managed to find out the solutions, how to dispose of the wagons and how to run out the operational leasing. There you have the economy absolutely different than carriages. They are the one asset when the leasing industry which enables us to do so, because it's quite easy to service this, because we have Russian railways. Russian railways, they getting a lot of load and solving questions when you're talking about the livelihood of the asset, such of carriages and rolling stock. And the age span is from 22 to 40 years when we're talking about different type of rolling stock. So even in the very difficult times when we have stress situations, we are moving over into the operational leasing, and then the situation is still not catastrophic. And the crisis of the year 2014 enabled us, and we got the knowledge as the players how to finance without the 100% ATV, LTV. So to take a lot of attention to the financial state of our counter agent. So we have checked our portfolio as the VTB group, and here I'm not only talking about the leasing, but I'm also talking about the bank. We don't see any significant problems if we have the rates 800 to 1,000 rubles. Second thing, when the profitability is decreasing, of course there will be a decrease in profitability of the special rolling stock. That will be linked directly with the problem that the profitability will decrease of profitability will address the issue that there will be less and less rolling stock purchased, so less spare parts will be used for the construction. So all the maintenance will be also decreased. So in this bad cycle, it will affect directly the rolling stock of all players. Talking about the universal rolling stock, some of the loads will be transported there, which is now being transported by the specialized rolling stock, and still, even though technologically, even though the convenience, there is a point of bifurcation where some of the load, some of the cargo, even though in the semi-open wagon it's easier to transport, but it's not comfortable and it's not safe. Still, you will have to move it by the semi-open wagons due to the economic reasons. So what will be the final line? So if the rate is up to 1,000, then it's fine. It can go down even to 800, but 400 would be too risky, but we don't see that it will happen. So we're feeling quite comfortable. Thank you. Ivan. Yeah, I agree with Evgeny. So we don't see any dramatic situation the next year. We don't see that the rate will collapse. So the volatility of the cargo rolling stock is quite strong. So in the winter we will have about 35-40,000 which will be just idling, but in the summer we will have the deficit again. We are all ready for that. We know the situation is like this from year to year. We are prepared. During the last 2 years we have accumulated the knowledge. We do not have leasing agreements with a zero prepayment, advanced payment, so therefore the debt per one carriage is quite low. So Evgeny is telling us the figures and numbers. For us they're adequate. We're accepting those rates. So we're quite sure that after the semi-wagon collapse of the price, the fully covered wagon will also lose in the price. It's understandable, but not as bad as the semi-open carriage. So, therefore, we don't see the drop, but maybe it will happen in the year 2021. The rate will decrease more significantly during the winter, but in general, the weather will stay the same, and we don't see that the rate will collapse under the 1,400, 1,500. One more thing. When you're talking about the profitability and margin, we should remember about the expenses. So today, to change the wheels for the semi-open carriage, if you're not FIGK company, you will have to spend enormous amount of time. And even if you divide that expenses by the year of 4 or 5 years and by 365 days, still 4 to 500 rubles will be washed out due to the change of wheels. And other maintenances are also extremely expensive. So if we will get some good maintenance, 700 per barrel per day, if they will get down to the average 200-300, because there will be no speculation for the spare parts, then the margin will grow and will be able to drop the rate for 400 rubles. So the second issue, when we're talking about the rate for the semi-open wagon, still a lot of operators, they having this kind of a direction which is bringing 2,000 more per wagon for the semi-open wagon. During the last years, it depends if you have a service contract or not, from 1,000 to 1,800, 900 rubles. Most of the operators are telling that the price is 1,800 rubles. Indeed, from the year 2000, 2,800 to 1,800, it is a decrease, but nobody is expecting a situation like this in the last year. So we can say this a local luck, actually, what we have now. So, but we're getting used to it, and we are forgetting that all the forecasts in the past, the level was forecasted 1,400, and that 1,400 was convenient and comfortable level for operators and cargo owners. So we're coming back to this rate of 1,400. So I don't see any problem with that. We should just remember how it was. We are glad when we're getting these extra profits, but it's not a drama if the level will stay on 1,300, 400, 500.
Then I have another question. Considering the fact that back in 2014 and 2015, many companies restructurized their payments, and there were debts that formed. In your opinion, or in the company's opinion, today's operating market, have they paid off their debts, or there's still low that remains from 2014, 2015? So, and if yes, then what's the amount of that debt from the operator's side? Well, we cannot talk about some average figures, because every leasing company has its own approach. At the verge of 2013, 2014, some companies were purchasing and financing with currency their purchase of carriages at a level of $100,000 per carriage. And for now, I just can say for my own company, we have only one remaining operator which still works for to compensate for the consequences of that crisis. We don't have such an operator, as far as I know. Out of major operators, the old debts have been paid off completely, and new debts, new loans were formed by cargo-owning companies. It's SOAC, Rusal. They became the initiators of that open carriages hype this year. That's why they will be able to pay back their loans, and operators are going into a new phase without almost no debt. If you take a global trans company, for example, they have a negative debt. If we take Novotrans company, they also have a negative loan debt. Modem still has large debt, but they will be able to cope with that. It's basically the only company that still has old debts dating back to 2014. Thank you very much. I'd like to give the floor to Evgeny Bogdanov, the partner from AT Kearney, for the overall analysis of the leasing market, what's going on currently, and what are the expectations for the market. I will probably not say anything about the market analysis, but I'll allow myself to share some remarks. I'll start with the last speaker when Evgeny said that everybody learned their lessons, and then all of a sudden he adds that everybody forgot about low rates all of a sudden. But there are always those who forget very quickly. In case of dramatic rate drop, we should not exclude problems. So that was a short remark, and what I'd like to say is that leasing is a tool that initially is necessary for specialized rolling stock, because that volatility in the market of carriage supply is actually focused around the open carriages, and the demand and the offer strike the balance. In case with the rolling stocks, specialized rolling stocks, the rate depends on the cost of the carriage itself, and the cost of the carriage depends on its production cost. So the volatility of a day rate in the market of the specialized rolling stock is almost always lower than the standard ones. If you talk about the specialized rolling stock, it's always minimal. It happens for the reason that the specialized rolling stock, as a rule, why we use the term captiveness. It's because it's destined, it's designed for the purposes of the sender of the cargo. If we talk about if we look at the development of the leasing market in the West, we will easily find examples of leasing company that are specializing in specialized rolling stock for a specific customer. There is a VTG company, the management of which they had this buzz phrase. The secret of our success is based on 4 groups of vitamins: B, A, S, F. It's systemic approach for the specific needs of the client. Same with the company GITX that is an overseas shipper that they were transporting tank cars and cisterns. In case with the open carriages, there is a huge risk of volatility, but the market risks are lower because the potential clients numbers are higher, and the deals that you used as an example, they are very typical for the leasing market for specialized rolling stock. When you have one cargo owner, one operator, and you can actually sign the long-term contract with fixed rates and so forth. And another thing that is very common for the market of specialized rolling stock is in the world is the share of the operational leasing. According to our legislation, we should not use the term rent specifically for the same particular reasons. The manufacturer has a very stable demand and stable transportation demands, so the future is quite sure. Well, about the leasing market, will the rates be volatile? It heavily depends on the cargo owners and operators and how they. This market heavily depends on external factors, on regulatory factors, on the well, for example, the bearings are being replaced, and there are the extension of contracts is being prohibited and so forth. So those are external shock factors which are not market related, which actually influence the demand and offer. In case with the specialized rolling stock lease market, it is influenced to the minimum by those factors because it's kind of a sideline market segment. So the colleagues from the leasing companies should be focusing more on the specialized rolling stock, not on the standard rolling stock. That's all from my part. Thank you very much. I'd like to make a small remark on this specialized rolling stock and the prospects. Currently, we see that one of the major risks is the lagging behind of the offer on behalf of the manufacturers of rolling stock towards these specialized rolling stock consumers. And there is a transfer from container transportation specificity towards tank cars and feeding platforms. And also there is another segment which is almost dead, and but some are still trying to revive it to make it look alive. It's the transportation of products with short lifespan. And for that case, we only have refrigerating containers. But the greatest question on behalf of the leasing companies is their maintenance, and there should be a synergy found with the cargo owners in that regard. As for the grain transportation and cement and mineral transportation operators, there is probably a risk of transferring towards or switching to open carriages, and the position of some cargo senders in construction materials. There is a trend of looking towards containers or open carriages. So for that type of risks for 2020, towards 2020, 2030, they are still there and they should be considered. So that was a remark on my behalf. Let me respond to that. In switching of transportation of chemicals and minerals, it usually that decision is taken for once in 10 to 20 years, because if you have a special loading infrastructure, it is specifically designed for special types of carriages, and it cannot be reconstructed in a short period of time because it is costly and it's time consuming. Certainly, a certain capacity of switching from containers towards containers is happening, but there is a restraining factor there. So I'll just mention it as a trend because it's slowly moving there. I have this suggestion for open questions from the audience, if you have any. If you don't have any questions, let's thank our panelists for answering all of our questions.